Today, the stock market is finally reacting to the bond market's rising yields. The S&P 500 dropped by 0.99%, marking its third consecutive decline, while the Nasdaq fell by 1.6%, ending its 5-day winning streak. The Dow Jones also lost 1%, and the Russell 2000 dropped 0.8%. What's driving this? The 10-year U.S. Treasury yield is now above 4.24%, up 64 basis points since mid-September. Analysts point to a combination of factors, like expectations of Republican policies leading to fiscal expansion and strong economic data hinting at a slower pace for interest rate cuts. Major tech stocks like NVIDIA, Meta, and Apple all saw declines, with Apple facing additional pressure after reports of scaled-back production for iPhone 16 models. Another tech giant, Qualcomm, dropped 3.8% following news of a terminated semiconductor design license, with ARM investors are watching this development closely as it could impact the entire chip sector. Meanwhile, Tesla made headlines as Elon Musk announced a turnaround with better-than-expected Q3 sales and profit margins, sending Tesla's stock up nearly 12% after hours. On the flip side, cybersecurity firms and energy tech companies faced sell-offs. First Solar plunged 15% after missing earnings, and Palo Alto Networks dropped nearly 5% due to deteriorating market sentiment. In the currency market, the US dollar to Japanese yen remains stable in the lower 152 range as the Bank of Japan signals continued accommodative monetary policies. Finally, let's look at precious metals. Gold futures, after briefly surpassing an all-time high, fell by 1%, while silver retreated 3%. Despite bullish sentiment in the market, experts like Warren Buffett and Jim Cramer suggest a cautious approach. Remember, as Buffett says, be fearful when others are greedy and greedy when others are fearful. Stay tuned for upcoming key data releases, including the third quarter GDP growth estimate and PCE inflation numbers. These will be crucial for understanding the market's next moves.